Hi guys, this is my first video which I'll be uploading in the YouTube. In this I'll be discussing which is the best way where we can purchase gold. We have two options, one is physical gold we can purchase or else digital gold we can purchase. So we'll be going through one by one which is the best way where we can invest for a long term or even for a short term. For short term we would not be considering it, but we'll be discussing of both the pros and cons of each. Let's say we decide to purchase physical gold and we'll assume that gold is trading at 1,27,000 and we'll purchase, and when we look at the bill we'll be having two things. One is making charges which will be there, and second thing is GST which will be there. And even in the GST, for making charges GST will be applied, so it will be additional cost. So let's say we did not mind about those things, we have given the full amount and we have purchased it. Or after a few years when we try to sell, let's say gold has reached like 1,50,000, let's assume like it has reached 2 lakh and we want to sell it at that price. So we'll go to the jewelry shop and we'll we want to sell these things. What is the best price which you will be giving? We might give you like 1,95,000 or so, and you will be thinking like the gold is already trading at 2 lakhs, and why this guy is giving like 1,95,000? Why is not giving me a 2 lakh? Because even at the time of what they call melting those golds, these guys calculate all the charges which they'll be bearing upon. So because of that, they'll not be giving the full market value. So when you consider all these things, one is GST which will be applied, making charges plus GST of it, and at the time of selling you won't be getting the exact market price. Another thing which needs to be noted is where would we keep those gold which we have purchased. Let's say we'll keep it in a locker facility. Even in the locker facility, the banks won't be taking those responsibility in case of theft, earthquake, or even tsunami, flood happens. They won't be taking any kind of responsibility to give you the what they call lost value. Only thing which they can give you is 100 times of the locker fees which you will be paying. Let's say you are paying 1,000 rupees and into 100, that is 1 lakh rupees worth they might give you as a compensation for these things, unfortunate things which has happened. Apart from that, nothing can be taken place. So all the risk which will be bared by you guys. So at that time we'll think, considering all these things, why don't we purchase a digital gold? That will be a better option. So in case of digital gold, we have there are two ways where we can purchase things. One, we have a service which is offered by a gold companies like Titan, Tanishq, Kalyan. Say we decide to save in a digital gold. So at that time these jeweler companies come up with a certain plans that there is a facility in our portal itself where you can able to save from rupee 1 to hundreds of rupees, and that rupee which you will be investing you can purchase later on convert it to a physical gold if you want to, or else they'll be keeping it as a digital. That's not an issue for them. So they'll be telling that it will be stored in a locker facility that will be handled by those company itself, and those company will be the beneficiary, not the holders which they'll be saving. So at that time, in case the company decide to go for dissolution in the sense closing of that company, so at that time whatever the savings which we have done, that cannot be reversed. So that those things can be paid off to all the loans which they have taken. It can be set off against those things. Even at that time, the RBI or not even the SEBI will be coming into picture. So even if you file for them, they won't be the in charge parties. So we may have to go with the court itself, and all the arguments which will be taking place will be in the court, and you guys know that in case any kind of thing fraud or happens, it's very difficult to get those money back, and even we are not sure that how many years it will take for us to return that money. These things where we purchase the digital gold, that is unregulated, we are not even sure that what price the gold will be purchased and what price the gold will be sold, and a lot of manipulation can be happening inside of it. And at the time of purchase, lot of GST or certain charges will be applied. And let's say we want to convert that to physical gold, and even at the time of converting to physical gold, there will be making charges applied plus GST. So all those things which will hinder the returns in the gold. The last and the best option which we have, let's say if you don't want to buy a physical gold but you want to go with a digital gold, at that time this will be the best case where you can put your money. That will be ETFs or mutual funds. ETFs and mutual funds, where let's say that will be handled by a mutual funds that is regulated by SEBI. Whatever the frauds or anything which will be happening, you can directly complain to SEBI grievance. So all those court hearings will be happening under the SEBI surveillance. The good thing about ETFs, it's publicly traded and it can be traded in market hours from 9:15 to 3:30, where you can do the buying and selling of it. So what will happen, let's say the ETF, let's assume a certain ETF, XYZ ETF, that is trading at 100 rupees currently, and you will put 1 lakh rupees of it, and if you want to sell it right now, you can sell it right now. The second you buy it, the next second you can sell it. Only the brokerage charges will be applied, no kind of GST or any kind of making charges which will be put. That is the good thing. And second thing is that will be putting it in a 24 karat gold. Let's say you purchase, let's say 1 lakh rupees of worth of ETF, and at the end of the day, that amount will be that much worth of amount of gold has to be purchased by mutual funds, and they have to keep it in a locker facility. And this mutual fund is not a private limited or a LLP, that is a trust, where the trust main goal is to not make any kind of profits. Its main goal is to give the best service as possible. Let's say you want to you decided that you want to purchase ETFs. To purchase ETFs, you would have to register for a demat account. Like you would have to open an account with Zerodha, Grow, Upstocks, Angel One. These are the brokers who provide a demat facilities. Demat in the sense all the shares, securities, or even mutual funds, digital mutual funds which you will be purchasing, that will be stored in this demat account. So demat account is nothing but an online locker that will take care of your holdings safely, securely. And even in these ETFs, the charges won't be much. It will be nominal, like 0.4 to less than 1%, nearly 0.5% annual charges. Second thing we have is mutual funds. Even if you purchase in mutual funds, as per SEBI rules, whatever the amount comes to gold funds, gold mutual funds, those guys will be purchasing anyways ETFs itself. So why to pay double annual maintenance charges? So directly you can go with the ETFs. And even at the time of ETFs, let's say you make a certain kind of profits, you sold within a year, at that time you'll be paying 20% of the profits which you have made. And if you have sold after 1 year, then you would have to pay 12.5% as a long-term capital gains. That is both applicable for even for physical, even for digital mutual fund and ETF both. But last few years, government has introduced sovereign gold bonds. You directly give the money to government, and they'll be taking care of all the gold, buying of gold and storing it. And we know that when the government is backed, then there is no chance of default, because the government cannot become default. At that time there will be certain security that it cannot go default. The sovereign gold bonds which will be purchasing, in that no tax will be applied. So whatever the amount of profit which you will be making, that won't be taxed. No kind of capital gains tax which you need to be paid. But the thing is, that will be locked for 7 years. You cannot withdraw those monies. We are getting a statement saying that government is stopping sovereign gold bonds. For them the loss is happening much, so they don't want to continue that sovereign gold bond. So at that time the only best option which we have in the digital gold, that will be a ETF. If you want to purchase any kind of ETF, two things you need to check out. One is what is the expense ratio, that is in the sense what is the annual charges, let's say of percent. Two mutual funds are there, let's say Nippon is there, let's say SBI is there. These two people provide gold ETF facility, and Nippon is offering a lower expense ratio compared to SBI. At that time Nippon will be the attractive one. And second thing we have to consider is what is the tracking error. Let's say the gold moves, the real gold moves 1%, and you will be thinking that if we put any kind of money, and at the end of the day physical gold will be purchased by the mutual funds, then it should move according to the real gold. But not every time it will be the same. Sometimes let's say gold move 1%, the gold ETFs might move 0.5% or 0.8%. So it won't be exactly similar, exact pin to pin numbers. But when you look at the long term, let's say you look at 1 year time period, 5-year time period, it will give a similar kind of returns. If gold has given 15% annual returns, then you might assume that ETF would have also given like 14-15% returns. There won't be a much kind of a difference in that. So anyone who wants to save any kind of money, even for a small amount, you can go ahead with the ETFs. That is the best thing which you can purchase. And that's it for the today's video. Let's see, I'll think what kind of other videos which needs to be made, which people needs to be aware of. I'll be making those things. Thank you for watching. Have a great day.